During his third fiscal quarter earnings conference, Apple announced a split of its shares. This is news that has had little impact, but which is of great interest to investors, especially those of small size, such as private investors. What is a share split of a company? The value of a company is divided by the total number of shares found on the stock market. With this calculation, the price of a share is obtained. In other words, the price of a share is the result of dividing the market capitalization of the company among all the outstanding shares. In a share split, the company decides that a single share becomes several of them. When a split is announced, the company also indicates what is the proportion of new shares from a certain date. The minimum is usually 2-to-1, where the shareholder with one share would have 2 shares at any given time. A split has no effect on the total value of the company, as it is simply divided into more shares. If we had a cake cut into 4 pieces and we decided to make a 2-to-1 split, we would have 8 pieces. But the cake, the value of the company, would still be just as big. A split does not change anything in the value of the company. It only affects the listing, making it more affordable for small investors. The interesting thing about the split is that it has a direct effect on the price. The number of shares increases, but the price decreases proportionally, maintaining the same value of the company. Continuing with the example of the cake, we would go from having 4 to 8 pieces, although the pieces would now be smaller. Why Apple has announced a split of its shares on August 31st, Apple will cash a 4-to-1 split. The share price has hovered around $400 in recent weeks. If we assume that the day the operation is performed, the price is at $400 per share, whoever had 1 share before the split would go on to have 4 shares worth $100 each. For small investors interested in this stock, it is an oxygen balloon. A small investor who only had $1,000 to invest before had 2 options: buy 2 shares of $400 and leave $200 without investing, or stretch to $1,200 to acquire 3 shares. For a small saver, neither option is ideal. There are some stock indices that use the price of a share to be elaborated, so the split does influence the weight that Apple has in them. Now, and thanks to the split, the situation will be different from August 31st. This small investor will be able to acquire 10 shares worth $100 each, optimizing their investment and without having to leave or add more money. A split adds liquidity to the stock, making it more attractive to small investors. Other tech companies do not usually split and maintain a very high share price. Google, for example, has only done this once when in 2014 it performed one with the strange ratio of 1998 to 1000, almost a 2-to-1. Your current quote: it rubs the $1,500. Amazon is listed at $3,164. Both prices make it difficult for small savers to invest.